So I would think financials is a very interesting sector right now. I'm sure everyone you would have spoken to in the last 3 months.
It's the consensus buy, but it's not moving.
Yeah, it doesn't move till it doesn't move. And once it starts moving, then obviously a lot of things you can say that I had been saying this and he has been saying that. But the point is...
As is the case of Bajaj Finance, right?
Yeah, absolutely. See, till about 3-4 months back, Bajaj Finance was 16-17 PE stock.
Yes.
I'm looking at PE for Bajaj Finance because asset quality is broadly over 2 decades has not really gone haywire.
Correct.
So 15-16 PE stock, growing AUM at 20, 23, 24%, earnings growing at 25%. It was a matter of time before it had to rebound. Similarly, in rest of the financials, especially large private banks, some of the NBFCs, some of the capital market plays, AMCs, all of that, their valuations are very reasonable now. You're getting 3 largest private banks of India or maybe even 4 largest private banks of India at a sub 15 P with ROE in 17-18 band. Now, I'm not expecting those price to book of 2.1 or 1.6 to go back to 4.5 in a hurry, or maybe they never go back to those levels. But can a 2.2 price to book or 2.3 price to book move towards 2.5, 2.6 if the environment becomes more conducive on credit growth, on deposit growth, CD ratio, and asset quality stays benign that it has been for the last 6 years now. So that pocket is offering a very good risk reward in our view. Then some of the consumer discretionary baskets, their valuations are still expensive, I would say, but they've corrected relatively in the last 3 months. A stock like Trent, which is growing top line at 40%, has corrected 30-35% along with the market in the last 3-4 months. Can it correct 10-15% more? The answer is yes. You cannot point a finger at the bottom and say this is the price from where it will not fall. But if earnings continue to grow at 35-40% for them, then obviously at some point of time, over a period of time, that stock will compound in line with the earnings growth. So there are many such pockets, healthcare, IT, where things are looking slightly better.
Can I intervene though? The conversation has been around large caps.
Yeah.
We are talking about the Ideation Mid-Cap Conference. So, wahan pe, Gautam, where is it that, and I'm not asking you to choose one kid over the other, but what I'm trying to understand is what are the favorites, themes which are being showcased at this time Ideation's conference from the mid-cap, small-cap?
So, specifically on mid and small-cap space, as I mentioned, there are 3-4 very important sectors which are visible in our conference. One is CapEx. Now, within CapEx, there are 10 sub-segments. Now, power, transformers, distribution.
By the way, you can remove that earpiece. It doesn't matter. Because I'm sure you can hear us well. So that's fine. So
my point is, in CapEx, you can see power, T&D. That space is seeing very good representation in our conference. Second, hospitals and rest of the healthcare. Right now, healthcare has become a very vast ocean in the last 2-3 years. Till about 2018 or 2019, when you said healthcare, all you meant was the old generic companies and some of the bigger names. Today, you have 10 plus hospitals listed. 3-4 diagnostic companies are there. And at the same time, you have seen some recent new niche listings which have happened. Right now, healthcare, incidentally, both large cap, mid cap, the earnings have been the most consistent. 8 out of 8 quarters, I was checking the numbers, they've delivered growth excess of 15%. Right? So healthcare has been a very resilient space. So that is obviously seeing a lot of interest at our conference. Then some of these discretionary mid-cap names, which are, I would say a very broad play on consumption.
Like?
Now, not staples per se, but say QSR, hotels. These are spaces where the damage on business fundamental has not been much, and which is why they're outperforming relatively. One of the favorite names for us for last 5 years in the mid-cap space was Indian Hotel. Obviously, it is no longer a mid-cap now. But if you see the performance of hotel companies, they've gone through 10-12 years of down cycle between 2008 to 20. And last 4 years have been phenomenal. What used to be 14% EBITDA margin business has now become 35% EBITDA margin. Asset light, so balance sheet has improved vastly, ROEs have improved. Right? Then you go into the niche IT companies. Obviously, the large 5, they comprise 90% of the profit pool and 92% of the market cap. But the real growth is in mid and small caps in IT, because large cap IT I have been seeing for last 5 years now, 7, 8 and maximum 10% growth you have seen. They provide a lot of stability and resilience to the portfolio, but the real kicker in tech has come in the mid cap space. So we have companies representing the mid and small cap IT space. And then of course in mid cap, small cap, a lot of things depend on your bottom up stock picking, not necessarily sectoral plays. So we have huge number of companies which I cannot put a bracket of any sector around it. Okay. But there are quite a few interesting names. And last 8-10 days of market action has given a lot of hope again to investors, to come back and see what has changed in the intervening 6 months. If business has not changed much, the earnings damage has not been there much, and if earnings visibility for next 2 years is still intact and valuations have come off, then obviously these are the times which lot of investors with long-term horizon actually wait for. Go back to the conversations in June to August when Nifty went from 23 to 26. I'm sure a lot of people would have told you, we'll buy at 10% correction, we'll buy at 15% correction. Mid caps are super expensive, we'll wait for 15-20% drop. So that drop is here. But you cannot be indiscriminate, you cannot be, cannot go and buy anything and everything which is available. The market is now being more charitable and giving you that chance to do your homework and then select, bottom-up pickings.